The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians. Oh, my pleasure to be here. Away Friday. Well, it feels like forever. I hate being away. I love doing this. I was at a introduction of a new an update to a particular software package that I have. Thought I'd go, and I must say that I didn't. Usually the explanations are very good, and in this case, I think that they were really trying to sell the brokerage part of it, the whole new brokerage part of their business, and I didn't get the sense that the person giving the lecture, who's done it for about 15 years, had the patience to do it as he always did. And I love when they go from kind of scratch to cheat, everybody like a novice, which many people are, and then you go step by step, and then I'm able to say, I've got everything here. Now I click on this, I click on that, and I've got it done, because I'm liable not to take the time or want to take the time to go back to study everything. I want to get it right there and then, have it working, and then I've got at least some templates. So I was a little disappointed about that, a bit of waste of time. Would have preferred to have done my show. Now, back at the ranch, what we've done is, today the Dow is up 3. At this particular point at 17,870. The S&P is down 2 at 2,094. The comp index is down 15 at 4,876. Let me just double check here. Let me just move this away. I'd like to get the updated, there we go. And we've got the VIX index is at 18.41. This is holding really high. It's putting a lot of selling pressure. If the volatility index holds above the 16s, that's selling pressure. When it goes to the 17s, you're talking about triple-digit selling pressure. When it goes into the 18s, it means that, yeah, you could have a counter-trend rally, which I believe this is, because based on the Chapman Wave methodology, as I showed subscribers over the weekend when I was sending out charts, even though I was away Saturday and Sunday, I still managed to get charts out. I would have got a lot more if I didn't have some internet problems, which turned out to be my own computer's fault. I didn't think it was, but it was. And I couldn't get out as much as I wanted to, but I did say that the Chapman Wave trend gauge flashed a signal on Friday that said within 2 days, be careful, don't get too short too quickly, because there is a chance that you could have a 9 to 11 point E-mini rally in the futures, which will help give support and a rally to the cash indexes. Doesn't say it has to be 9 to 11 points, but it means that there's an influence to the upside. Now, as we're looking at this right now, let me move that away. As we're looking at this, there are a couple of things that I should mention. Number one is the reason for us to go short the other day, last week, was it the week? I can't even remember now. Let me just double check here. Let me just double check. Okay, short from small long, that would be on the 9th. On the 9th. What we today, the 13th? Yeah, on the 9th. The reason why we went long on the 9th, which was right there, is that, let me go back to the Dow and show you what I'm talking about, is that within the context of the patterns that we look at, while I see new highs to come, at this, that's a new high over the 18,000, not yet over the 18,351, but over the 18,167 area. I think we have to back and fill for a little, just a little bit longer. And this particular, now with the horrible news over the weekend and everything that's going on in Europe's down and Asia's down, everybody's down. I was asked about the Nikkei. Look, the Nikkei down. This is the futures contract down 265 at 16,111. Made a peak D. What did we look for in the Chapman Wave? We looked for peak Ds. What did we get in the Dow? We got a peak D right there. See peak D at 18,167 on the 20th, and then we pull back to 17,331. We run up to peak D again on the 8th of June at 18,016, and now we're pulling back underneath the 9-period moving average. However, because of the trend gauge flashing, it says be careful, there could be a bounce. And I'm expecting something like an A to B equals C to D, so trough A maybe and a trough B. Then we got to see, is that enough? Do we need more? I'm not sure just yet, because we are very overbought in some sectors, but not so much in others. So let's just finish up here. We're going to go GC, which is gold. The reason why we are short the Dow, and we have some short positions and we have some long positions, a real mixed portfolio, is that we are long gold, because I believe that the gold stocks, that is the stocks themselves, as opposed to just the gold index, like a continuous contract or even trading gold in the futures or the GLD, I prefer right now to be in something that is representing the miners. So this is a very nice position. The gold's up 10, it's 60 at this particular time. Double check at 1286 in leg C. It should go to D. It doesn't have to. This is still what's called a retracement failure mode, because it hasn't taken out the previous left side high. It's just an explanation. It's not going to say it's going to fail. 1308.30 is what it has to take in the continuous contract. However, that weekly Chapman wave oval pattern, the leg, the body, this could go to the neck. I think we're going to go higher, and then we will have a bit of a dip as the dollar regains some strength. So let's just do this. Let's take out, I wanted to show you something quickly in the E-mini, if you don't mind, right here. Look, the E-mini is 2086 as a low this morning, but 2082.75 is the low of importance on the 3rd of June. That was the low at 2082.75. Left side, right side price time match on a shorter term basis takes you to that peak F. But if you go to the peak G, you could go, right. And then you could go all the way to 8 o'clock tonight. 8 o'clock tonight on the 13th to test 2086 is the low, breaks that in 208.75 on the E-minis. This is still the June contract, haven't switched yet. Okay, now what I want you to do is this. We've got the gold. I want you to look at the dollar. Look at the dollar. DXY, the dollar index is pulling back. It's down 20 cents at 94.37. It made a peak E at the left side, right side price time. It was a time match, but a price failure, because it didn't take out the high or touch the high of the 28th of March of 96.40. Instead, we got to 95.98, I think it was 95.97 on the 30th of May. Pull back pretty sharply. This looks to me like the inverse of the chart we were looking at in gold of the weekly. Looks to me like there has to be a little bit more testing of the downside of the 94 area, 94.00. Takes that out, then that whole 93.50 area is going to be next. And a question about the EUR USD. Let's just do that one first. We've got it right there. Yeah, it's the same as the dollar, pulling back. I don't know if it's got that much strength. The weekly chart really looks like it's holding well in this upper range of 1.20 to 1.40. It's in that range, but very clearly a punch into the 1.412 1.142 would suggest that it's going to try to retest the high that was made back in May, the week of the 6th of May at 1.16. So I think I've covered a chunk. I'm going to just do was a question about the yen FXE. Let's go to the yen as we're going out. FXE, yeah, it's the same pattern that we're looking at. I haven't finished notating it. I'll do this one over again. Basil Chapman, Tiger Technicians Hour, and the Dow's down 5, S&P's down 3. I'll be right back after these very important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
A couple of things. Actually, it was the the FXY is what I actually need to have looked at. So let me go back to that in a second. But I was also asked about the XLU. This is really important. This XLU has been a spectacular winner. And it's in an up channel, and it's going to the actual resistance. It's in what I call the Chapman Wave sell zone right now, or the repellent zone. You don't have to sell. I'm saying that's what it's called. That is the sell zone, which is got nothing to do with the Kel zone, unless you go to the north end. But right now we're looking at, I'm trying to get rid of that chart, that trend line. There we go. So, yeah, but it's still holding very well. The XLU is looking good in the monthly chart still. The weekly chart is getting a little toppy. I'm going to watch this closely, very closely, to see what happens. We've got an alternate count, G/C. I wasn't able to give charts as much attention as I wanted to over the weekend. Just that's the way it went. XLU has at 50.64 up 7 cents. It has 51 30s to 51 50s as very strong resistance at this particular point. Not that it can't break there, I'm just saying that's what I'm looking at. And the support is at 50.10, that's 50 cents lower. So we're looking at $1 up, maybe $1 down, and that's going to be maybe the trading range for a little bit. Now, a couple of things that I need to talk about. I'm going to go to so that's the XLU. Actually, this is the S&P Select Utility Spider Fund. So doing very well, obviously. Bonds are doing very well. TLT, I wonder if TLT, it made leg D in the weekly chart. It's in leg C, maybe a peak C today. Tomorrow we might get a D. And then we've got to start looking at something very important. Do the yields, let me show you the yields. Actually, I'm going in 3 places at once. Let me do that. So the bonds are still looking good. The utilities are still looking good. However, if I go to why is that not working? Okay, if I go to the TYX, the TNX, and the FVX, that's the 30-year white. This is the white bars here. 30-year T-bond yield. The yellow Goldie is right there. So that's at 24.45, down 2 cents. Looking like it wants to test at 24.09. It's going to be very important. The low that was made back in February, was it? Yeah, February, the week of the 12th. That 10-year T-note yield is at 16.28. That's 1.628, and that's just a little bit above the low that was made at 15.67 the week of the 12th. And the week of the 12th also has 10.08 as the 5-year T-note yield, and you're trading at 11.40 right now. That's a much bigger distance to go down. However, what's really important about this chart is it's showing you the H pattern. Look at all these different H patterns. This H pattern should test or get close to the 2409 30-year yield, and then we're going to see, because after the second little mini H, which creates a larger H, which is also a lowercase m formation, think lowercase h, lowercase m, two arches next to one another. And that says that there should be a bounce coming within a week. And that bounce is going to be really important, because if the bounce, first of all, if we close under 2409 in the yields for more than 2 bars, that's 2 weeks, consecutive weeks, the week that it closes, if that closes under 2409, you have 1 more week. I'd say maximum 2 weeks, but you've got to close above 2409. Otherwise, yields are going even lower. And why doesn't that reflect? This is the South African Dow. This is it. I want you to look at this chart right here. Leg D, a possible peak D in wood, WOOD, iShares Global Timber and Forestry ETF, and it's trading at 47.04. It made a high last week of 49.30, and it looks to me like there's a good chance we're going to roll over and make a D. Any new high, any new recovery high, say into the 49.60s, 49.70s, that's going to be very positive. I think it's going to be tough to do right now. The Philadelphia Housing Sector Index has made a peak C. We're going to see if this just consolidates at 233 and it pulls back. If it closes underneath 230.51, that's not good news. But if it could just hang out here for a week and then have a leg D up, that's going to be very important for the housing sector. So I wanted to show those charts. I also want to do something else right now. This is the third thing that I need to get done today. Being in Brooklyn on Saturday and Sunday, and really going to a lot of different places, whether it was the sculpture park, whether it was the just a lot of places, especially along the river, and it's just a spectacular view looking over to Manhattan. And most importantly, the buildings that are going up at this particular time, the number of apartments, I would have to say, and I'm going to write this, I'm going to put it as a note into my subscribers so that it's documented. This time in 2018, it would shock me if there isn't a major recession in Brooklyn based on the glut of rental apartments and condos that are being put up. It is, when I say there are big blocks, I don't know about you, but here in the Boston area, we have blocks that are okay. But when you go to Manhattan and you walk very narrow, avenues? No, narrow streets and long avenues, whatever it is, when you cross from river to river, those are long blocks. If you're in a rush and you're in the wrong place and it's a long walk just to go 1 block. Well, Brooklyn has not quite as long blocks, but they're actually a little bit wider, or longer, or wider. It's diagonal footage comes out about the same because they're a little bit wider. And I must tell you that if I've been in and looking at real estate, in and out and looking at real estate for long enough to know that I don't know what it could be. There's no migration to Brooklyn by the youth of today. They've already done it. I don't know what can bring another bout of newbies to Brooklyn or even Manhattan. I'm just talking about Brooklyn because I know it very well. I just have to tell you that I'm shocked. The waterfront, where there was just nothing, has spectacular 14, 22, 30, almost, I don't know if they're 30 stories, but huge buildings. I actually quite like the designs. I like the whole thing. I like this whole renovation stuff. It's just a pity that you block out spectacular views because they are blocked out forever. You know, when you go to, I've never understood this. I know in South Africa, when you've got coastline, majority of the time, there is always a planning board and a this board and that board, so that there aren't, well, there are certain places, yes, they are built up in Durban, on the on the East Coast, there are hotels and buildings. It's always been like that, very close to the waterfront. But in most of the other places, I always wondered when I got here, what the heck? You've got some fabulous views, and they just shoved houses here and there and there, and there was no real planning. And beautiful little islands and stuff all around Boston, but it's just, there's no design aesthetic. It's just squash, squash, squash. And then we'll think about too many roads, too many people, whatever it is. So that's happening here in Boston as well in terms of the skyscrapers. I wanted to take a moment to talk about it because it isn't just charts we look at, not the way I look at it. I am convinced that there is a housing glut that is housing, a rental, a hotel, an apartment glut that's going on in the Northeast, in the places that I've been along Connecticut, New York, Boston, and I even here up a little bit north. So this is going to hit, and it's going to hit really hard. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. I hope I showed this chart. I apologize if I didn't. I had it all ready. I know I did it before my show started. This is the E-mini 10-minute chart. It shows it went all the way down here to the 2086 area. Then it ran up quickly to a peak C minus. It came back. It went A, B, C minus again and came back. And now it's going A, B. And I'd circle this in at the beginning of the show. We were somewhere up there, obviously. And now we've touched that 9-period exponential moving average. So I'm just going to make it real clear. The larger trend, I would remain short the E-minis, but bounce formation we've had. Look, we've gone from the 2086 all the way to 2098. I would say that that's a 9 to 11 point gain based on the Chapman wave technique of the chin gauge. And we went, so in fact, that is 86, it's 14 points. There's a lot of points. And now we're pulling back. I think that's going to be really important, how we handle that. I think most of the gains have been made today. And then I had questions about the Brexit, etc. You know what? I'm not actually following it very much. I haven't had time to follow anything, actually, other than what I like, to take my time from my subscribers. But most importantly, I think that this is a period of consolidation. I need to go there, so I'll go there right now. Here we go. This is the Dow. I made a peak D top in the Chapman wave. We're under the 9-period exponential moving average. I couldn't put a down arrow in because the MACD is still quite good. Stochastic hasn't gone under 87%. And this is suggesting to me that it could be a little bit of time rather than price. And the 17,600s, I think, would be where I'm probably going to say to subscribers, I'm looking to see whether or not, if we get there, of course, whether this is where we want to switch and go back to the long for the next move up. I don't know yet. So let me just make it real clear. The close below 17,780. I've been talking about 17,770. So let's stick with that. 17,770, about another 60 or so points below this. And that's going to suggest we're going down very quickly to test this left side, right side price time match, and that would give you 17,664 as a target. On the upside, you've got dashed lines all over the show, and there's tremendous support right there, and that right there is 17,920s. All right, and the high today so far is 17,893, and that's on the Dow. Let's get out of this. We're going to go to I did a look at crude oil, so I had a question about crude oil. See, remember I said that the USO had done everything it needed to. It's gone to the 200-period exponential moving average, and it could trade between the 1237, that's the United States Oil Fund, could trade between, let's see, 1237 and 1171. And if that's taken out, it will make an arch formation and test the 1156 low of the 1st of June. My thinking was that crude oil had made its move for now, that it was going to consolidate, but the weekly chart was still strong enough to say that it should hold support, and I personally would not be sure. I thought about it, but I thought, nope, you want to be looking to buy the USO, and right now the crude oil is at 49.15 on the continuous contract. Most importantly about this, you've gone to a peak D, a leg D, which could become a peak D in the weekly, and that was saying to me, yes, I had said you could trade between just above 50, maybe a little above 52, but most importantly, the 48 to 46s is really the area of containment, and I'm going to stay with that. Question about POT is Potash Core, Saskatchewan. Nice bounce. Oh, man, this is a tough question. You want to be in this early and not chase the bounce. So I'm going to do this. I don't think it's looking great. I think it's got an H pattern that goes to an M pattern. But I absolutely see at 17.40 up 39 cents today that it is in the area of rotation. In other words, we've looked at since the summer of 2010. We've been looking at rotational corrections. I don't see any reason why this doesn't become yet another rotational correction. And that's saying to me, I must look at these. Let me look at that. But potash and AGU is one I always look at. Agrium, I think it's called Agrium Inc. It's at 93.70, down 21 cents, maybe made a peak F or a C. But the weekly chart is in A, B, leg B. So far, that's holding quite nicely. What was the other one? Mosaic, I think it is Mosaic. Yep, the Mosaic company. And yeah, you know what I'm going to suggest? Peaky in the Den. Out of the two, let me just do my eye. Look at them both. 1, 2, 3. Left side's daily, right, middle is weekly, right side's monthly. Here we go. This is Mosaic. Quickly, keep your eye on the 3 charts. I would say Mosaic has just a little edge technically than Potash, but Mosaic is trading at 27 and Potash is at 17, was it? So there's a $10 difference. My thinking is that if Mosaic goes up, Potash goes up. So I'm talking about just bookkeeping, economics, and money management. I would say if you can wait, have a little patience, because if by the end of the day, Potash slides underneath 1720, under the 1723 9-period moving average to 1720, I'm going to say hold off another day. And then what I would say, yeah, I've got it. I would buy potash. It's at 1736. If it trades at $17.48 to $17.51, look at the chart right there. And my thinking is this, that we've made a peak D in the 120-minute chart. If it's able to take out 1776, hey, that's exactly, that's exactly what I'd be looking for. So I do nothing right now. If you want, you could just have a little nibble, but the real trade is if potash goes to 1748 to 1751, there's a good chance it's on its way in the 120-minute chart to make another peak. A, it's already done an A. That would be a B if it's in the next 120-minute chart. If it's this chart, it just extends A, it's even more bullish. And if it pulls back, you don't want it. So I would buy it on upside move. It's at 1740. About 8 cents to 11 cents higher. I want to buy strength. I do not want to buy weakness. And the stop would be today's low. If you want to keep it as tight as that, I would actually. And if you're in it, overnight, anything can happen. It's a little tricky. So I would not get carried away. I'd rather be buying it on moves, stair-step moves to the upside based on the 120-minute chart. I hope that helps you. And then what I would say is if you haven't got it, and by tomorrow morning when we're on my show this time, if it's trading underneath 1714, let's give it a little room. Let's say underneath the candle of Friday, 1690. I'm just going to say, hold off. You don't want to touch this yet. All right. Only a little bit of strength and then a small position. That small position, I would not hesitate to add to under certain conditions, but it hasn't even met the first criteria. Okay. So now I want you to do this. A couple of real good questions. ALJ. Oh, ALJ. I don't think I've ever looked at ALJ. I don't even know what it is. ALJ is, Along USA. I've heard the name. I've never seen the chart. Ugh, don't touch it. Don't even look at it. You should not have put it. You should not have hurt my eyes. Not good. But WNR, maybe that's what I know. WNR, isn't that the one that they were going to do? Western Refining, yeah. Oh, you've hurt my eyes twice. Sarah, that's not good. That's not good. This is that Chapman wave, left side, right side, time price match, and it's broken in a shorter period of time, and it's got a close above. It's at 1951 WNR, trading down 105 at 1953, down 5%. And by tomorrow, actually Wednesday in the morning at the latest, it's got to be trading above 2064. I don't know how it's going to do that. Wake me up on these stocks when you can see WNR at 21.50. And what was the other one? ALJ or something? ALJ, I bet I hit the wrong thing. ALJ, I know. ALJ is correct. ALJ, where am I typing it? It's not going in. I'll be back. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back just real quickly. Sat in the den. You wanted me to look at SPGI. You're short. I think your short is perfectly timed for the daily. Watch the weekly. The weekly technicals are still quite good. It's trading at 107.89, up 38 cents. I think you're right, but if it breaks, the 106 and 105 area is strong support. So if it breaks into the 104s this week, you're on your way, because that says that the weekly chart should start to weaken a lot. Treat it as a short-term trade. Lower your buy and stop. I'd say that at one part of your position should have a stop at about 109.30. And if that's okay with you, then let it run to the downside. I do think it's going to the downside. I'm just saying that the daily impacts the weekly impacts the monthly, but most importantly, the weekly and the monthly are still acting very well. So treat it as a short-term trade. We have a stock just like that. It's acting beautifully for us, but I'm treating it more as a short-term trade because the weekly and monthlies have been spectacular. I'm trying to see if we can time an exact top, as we always try to do. We'll see what happens there. All right, Brenton Martinez, California, how are you?
Doing great, Basil. How are you today?
I'm well, thank you. You'd like to look...
Well, I thought of no better person to call than Basil Chapman when it comes to the VIX. So
all right.
I knew you touched on it briefly previous in the show, but I did want to expound on it a bit. And my general question was just looking at the price action of the VIX. It's made I think, a pretty significant move, but I don't see that same correlation in the market. Typically, with
correct.
Making that kind of move, you expect the market to be down quite a bit more. And just as a quick note, I am long the TVIX, and then I'd love to get your opinion on why you think there's been the big move and not so much the correlating move in the market. Is it portend something bigger in the market, or what do you make of it?
Really very good questions, pertinent questions, because there are two things that go on. In my thinking, when there's a technical, remember, price is the arbiter of a trend, but every once in a while, what you get is that in the brushes where people aren't really looking, so somewhere very subtle, there's an action that takes place that says, while in this case, price is not quite as down. In fact, with the VIX up 2.04 at 19.07, the market should be down. The Dow should be down at least a minimum of 170 points. The S&P should be down a minimum of minus 23, and the comp index proportionately. So what we're looking at here, and even Friday's action in price was way better than the technicals indicated. So what I think I'm in my analysis, you remember what I said, that if you listened a little earlier, that based on what I'm looking at, I'm treating this as a shorter term move to the downside. At this point, I'm not saying it's the big one. I'm saying there are conditions that are saying that it could get bigger and deeper, but I want to treat it as if this is just the starter position, exactly what I just typed in to the den on SPGI. to Sat, who asked the question on SPGI, and it's down a little bit, but mostly the weekly chart and the monthly chart look real good, and yet the shorter term daily is indicating that there could be quite a bit more to go on the daily chart. That will impact negatively the weekly chart. So this is what I'm looking at. In the VIX, even on Friday, we were unable, actually, if you don't mind, I've got the VXX up because that's in a leg D, hitting the 200-period exponential moving average. But I'm going to just talk for 2 seconds while I'm getting the other chart up that I really want, which is, let me get rid of this right here, make it lower. I wanted to talk about the VIX itself rather than derivatives that you use. And I'm going to go to the VIX. And what is really significant about this, if I can type it in the right place, $VIX.X. What's really significant about this is that the first time you're seeing over the period of the last 5 sessions after the market on the 8th made its top, this is the first time that you're seeing fund managers put their money up and say, hey, we want insurance. Now, when I see one of the reasons why on our other trades on the VIX index, we were either just fractionally positive, fractionally negative, is because we didn't see the kind of buying, the hedging, the insurance, and the actual trades of looking at the short side being perpetuated and being fulfilled throughout the day. And that's now what we're seeing. The Dow tried to rally, couldn't rally. The VIX index had gapped up. It held over 18, is now at 19.12, is actually now at the highest level it's been since back in March, I believe it was. We were making the lows there, so let's go to that. So that would be right. Oh, okay, that's the weekly chart. No, that's good. That's what I want. So the weekly chart, the high on the 20th was 1765. And then we were coming down from a major high back in January the 20th, and we hit 32.09. That's China global the Fed rate fears, and it just kept going under the 9-period moving average. And even to this day, since it broke down, the VIX index from the 19th of February, the week of the 19th, has not closed once above the 9-period moving average until this past Friday, where it went over the 9 EMA and it hit the 200-period moving average and stopped. This is the gap up above it. So I'm thinking this. So you have a position now. You still have your positions?
I have 1,000 shares at 245 on the TVIX.
Okay. So let's do this. Let's go to the TVIX right now, and we'll talk apples to apples. This is a powerful move, but it's only a leg A. I say only a leg A. If it was a stock, I'd say only a leg A. It could still go to a B, C, or D. There's no guarantee with this thing that it can do anything more than an A or a B and then fail. You'll want to see sustained moves. But the power of this move and the fact that it's holding so well says to it's one of the reasons why I didn't want to get anything fancy in my opening call. We got our short positions. I wanted to hold them. I didn't want to take any profits, anything like that, is because I think this is a move that's going to have a little bit more in the way of the upside. The 9-period moving average on the weekly chart, this is trading at 303, up 33 cents. The volatility index, 2 times the volatility index short-term trade, but it is not trading the short side, it's trading the long side. So for the first time, you've got a nice instrument over the last few years where you can trade the VIX index if you time it perfectly. And Brent, you're going to appreciate this. When I say if you time it perfectly, what do I mean? I mean that if you don't time it perfectly, you're going to suffer quick, tiny little losses, but they are percentage-wise quite big because you're looking at a 3 or a 4, in this case, a $3 stock. It was in the 2s. So that makes it very difficult. So now comes, what do I do? I'm going to make the suggestion. You've got 1,000 shares. I would take 300 shares, and they're probably going to be lost. So you have to think about if you want to do it. But I would scale out of a little bit. I'd try to keep at least a half the position. I'd actually try to keep 3/4 of the position. But something at 304 must be there to say, you know what, this thing can flip on a dime. We saw it earlier. They tried to do it. They couldn't succeed. This is leg D up. 310 is the 200-period moving average. So here's what I'm going to recommend. If TVIX hits $3.10 immediately I either take something off or it could even be 200 shares. I don't care. Just reward yourself or put a real tight stop in of, say, $3.06. Try to keep the core position. And what I would say to you is, if the market closes horrible today, tomorrow, if there's a big spike to the upside and you haven't taken off anything, that'll give you another opportunity to take a little bit off. I think this is legs to the downside. But as a trade, I think you've done fabulously. So reward yourself, okay?
All right, thank you, Basil.
Pleasure.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Dow's down 61, S&P's down 8.5. We're going to go straight to Stephen Myrtle Beach. Steve, how are you?
Hi, Basil. Thanks for taking my call.
My pleasure. So you wanted to look at Ferrocore. I have not looked at Ferrocore for, I can't even remember when I last looked at it. It has fabulous move all the way into mid-2015, and then it stopped at about the 17 area, pulled back to 8.5, 9-ish area. Now it's right on the 200-period moving average in the monthly at 1396. So my question is, well, what are you doing?
I'm long, looking for it to go higher, but wanted to have your input on what price levels to be watching.
Okay, so are you long from quite a lot lower down, or just recently?
No, somewhat lower, like in the low 13s, just marginally positive.
Okay, so then that's the reason why I asked you, is that I spent quite a bit of time during the break once I see what you wanted to talk about, and I'm having trouble giving a notation. I might have done a little too quickly, and I've got a question mark, and it should really, the way I'm looking at it, it should have been an instant restart type thing. It should be a D at least here. So I don't know what it can't be an A. But I'm looking at this, and the MACD and stochastic are quite poor in the daily. The price is held up pretty nicely. I think it's in a consolidation pattern. Most importantly, what I'm looking at is in the weekly chart. That's the one that's the best looking of all. So I'm going to do this. It's down today 23 cents, which is means that it's kind of market. It made a top with the Dow. It's pulling back with the Dow right now, or the S&P. And the weekly chart is something that's very interesting. So I'm going to make two suggestions. I'd like to, what's today, Monday? I'd like to give it a day or two. I'm going to give you parameters to look at, but I'd love to look at this again because it's going to be a little bit of a market tell, ferrocall, because if it pulls back and closes under the low that was made on the 1st of June at 1354, I have to look at it as an expanding triangle, and that's saying to me the 1253 area could be hit. That's number one. Number two is if by the end of the day it's actually improved, I'd love that it improves more than the S&P or the Dow, and in fact it gets closer to the 1412 area, because that's going to say to me, it's got a little bit of independence. Right now it doesn't have that. So I'm just saying to you, I probably would say, just on the off chance that things happen between now and tomorrow, that if it takes out let's just be real clear. If it takes out 1380, I'd be a little careful. I'd probably lighten up on the position because I think you're going to be able to add back at a lower position. I love the weekly chart. The monthly chart is acting well, but I'm a little concerned that the short-term chart could pull you back down to the 1340s. Now, I don't want you to get stopped out and then get right back in at 1340. So I'm saying, give it a little room. If it closes under 1380 today or tomorrow, take a little bit off, and that's something you might prepare to put back on. And let's talk again. Hopefully you can call me tomorrow, but let's maybe Wednesday's the day to give it just a little bit of time, because I don't want you going in and out, in and out. You've got your position. I love that if that position can hold. If you even now want to give your position maybe a 20-cent stop, it might be too much for you. That's okay. But I prefer to say lighten up a little bit under 1380.
Great. Thank you, Basil.
Okay, and hopefully we will talk a little later. I'm going to put in my notebook here to look at it again tomorrow and Wednesday, just in case you can't call. Thank you so much for calling, Steve.
Okay. Thank you.
Good. Pleasure. So, folks, this is what I'm looking at right now. The market, I'm about to get a down arrow. Okay, that's important in the daily, and that daily says that in INDU, that there's a good chance, that the stochastic, which is still at 86%, and the MACD is down, that I'll have no choice but, if there's a really ugly close today, to put a down arrow. If it breaks to the upside, so be it. But the down arrow means it's a more important a down move than normal. Okay, let's just make that clear. The weekly chart's still pretty good, but the most important thing about this is keep your eye on the VIX index. I'm convinced that it's now at 1950. Holding in the 19s through the day is a very negative thing. The market could close down triple digits if that's the case. You want to see the VIX start to pull back into the 1870s as the market rebounds strongly. I'll be back tomorrow. Have a great day. Please check out my opening call. I think you'll find it interesting. And check out Steve Rhodes' webinar tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.